Hey everyone, it is Evan here from the Trade Risk on Friday, December 14th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we're going to jump right in here to the market technicals, take a look at what went on this week. It was another painful week for the bulls, adding to December's losses, particularly here on Friday. We went out on the lows of the week for the most part. Dow Jones, S&P, Russell, Qs all down nearly 2% on Friday's session, still firmly in the red over the 5-day change. You can see the Qs trying to hang on here. We're below all the key moving averages in some of these in the major averages, and we're in fact below the lows from last week in the Dow, the SPY, and the Russell. The Qs still showing some relative outperformance here, so holding on to last week's lows. That's mildly interesting, mildly constructive. We'll take a look at that when we look at the charts. When we scroll down here, as we might expect, most sectors in the red. It's financials and the Dow transports. That's what's leading this market lower. On the upside, pretty surprisingly, in fact, though, we do have semiconductors, which are trying to stay up, trying to hold resilient right up here with utilities. So pretty interesting there. And when we look at some of the other major markets, we see the dollar really holding up here. We got commodities down, natural gas really giving back a lot of last month's gains, and we do have actually the VIX, which is down on the week, which is a little surprising given the fact that we did see a pullback and we did see some kind of volatility to the downside, a little bit of compression intra-week, but VIX was down this week despite most of the indices finishing pretty firmly in the red. So let's take a look here at the charts. We'll start with the S&P 500. This is where we generally start. This is the weekly time frame, 1.45% to the downside. We've been talking about structure. We use the word structure quite a bit here when we look at particularly the bigger chart, the bigger time frame charts like this weekly chart here. And in terms of structure, we've been saying, this market has essentially gone nowhere. It's moving sideways. It's frustrating the majority. It is seeing some volatility take place under a key trajectory, which is never a good thing when you see volatility expansion underneath key major trend lines. And now we're starting to actually see some of this noise, which has been taking place over the 5 weeks, starting to mean something as this market starts to break and close at new weekly lows here, new weekly recent lows, I should say, under this, some people are using 2600, 2615, 2620. Doesn't really matter. They generally draw these areas here with sort of a crayon, the support and resistance that is. But you can see we're starting to actually roll over here and break down from this range. So for me, the way I look at this is it's sort of do or die here early next week for the bulls. This is the spot where we really need to see the bulls save this market quick. This is where you'd want to see dip buyers come in. Maybe Monday we open lower, get some panic out there, run a tail down here, run some stops, and then see a reversal back into this range. That is your ideal situation here if you are bullish, or of course we just kick off the week with a gap higher and rip to the upside. That's of course a bullish outcome as well, but as it stands now, sellers are in control here. They have the upper hand, and this is a place where the market could get ugly here and could be a very quick trip back down to retest the lows from the year back in February around 25.33, where we close. Based on where we closed, that's only 2.5% lower than where we closed today to retest the year-to-date lows, so that is something to keep in mind. Certainly, if we can hold below this 2615, 2620 area, you've got to imagine that retest is going to be on board. So weekly time frame, larger picture here, looking pretty bleak for the bulls. We do have momentum continuing to make new lows for the MACD, so there's a lot of concern there on that weekly picture. When we go down here to the daily chart, we'll sort of switch views here. You can see we did break below. We were looking at the SPY chart here, but this 2627 point. This is where we found the market. We found the market finding some buyers stepping in here back in mid to late November, kind of reversed above here back in late October. We hammered and closed above here on Monday of this week, and now we kind of gapped down, broke down below it, and we're very quickly coming back down to the lows here made on Monday. Monday. So when we look here at kind of the last line of defense, this 2590 area, that was Monday's lows from this week. When we had our midweek video on Tuesday, we said Monday's lows, that's your line in the sand now, and we are right back essentially to that line in the sand. So this is why I say that I think it's do or die. It's a time where you definitely would want to see dip buyers start to show up here early next week, and if we continue to persist and hold underneath 2630, the longer we stay below 2630, the more likely we are to sort of roll over and officially kind of break down, break structure, retest the lows, and really kind of get ugly here into December. But the one other sort of, flip side of the equation here, because we always want to keep an open mind. This isn't about predicting what's going to happen. It's keeping an open mind, looking at some key levels and trying to, frame out a plan of attack based on that information. Is this is a highly watched level, right? Every technician here this weekend that's running through charts, they're looking at the same levels that we are right now, and we all know that this is a very important level. So there's a lot of, games of trickery that sort of get played right around these levels. Markets can move fast at these inflection points. So I think, again, as always in these periods of volatility, it's tough to pick an all-in sort of, hammer long, hammer short in any one direction, but just be aware that, we could see some type of big reversal, some high volume, some real capitulation kind of come in here around this area. So if we start selling off next week, it could be, the closer to the turning point, to the end of the selling versus the start of some new selling. So something to keep an open mind. It's not a prediction, not saying we have to reverse, but these are key levels where the market likes to, really kind of suss out who's selling, who's the weak hands in these spots. So that's really the big picture landscape there. Levels, again, we kind of talked about on the bigger time frame. It's really 2533 below where we currently are. When we're looking above where we currently are, 2630, that's what I'd want to see reclaimed. If we can shoot up back above 2630, then the bulls have something. Still got that positive divergence there from the MACD momentum oscillator on the daily time frame. Weekly chart, not so much. So that is the S&P 500. Russell 2000, this is what is helping roll this market over, lead this market to the downside. This is down now, making new year-to-date lows. In fact, it's down 8%, almost 8% on the year right now, which is pretty interesting to think about. But when we look here at the yearly, each candle here represents 1 year. If I clean up this chart just a little bit, you can see here we just had this big outside reversal year for the Russell 2000, and we're in fact almost giving back 60 or so percent of last year's progress already. We were up 13% in the Russell last year. We're down almost 8% right now, so we're giving back a lot of last year's gains. When we look here at the Russell 2000, throw on a weekly chart, this here structure, as we talked about structure at the top of this video, this is more convincingly breaking structure, breaking to new lows here. And if the Russell is going to lead us to the downside, and this is sort of a front run forecast of what's going to happen for the S&P 500, then of course, that is not a good outcome if you're on the bull side. This means we are rolling over, we're breaking down through this support. And when we think about the next big level, it's all the way down here at 133. That is where we chopped around for a good amount of time back at the start of 2017. In fact, right after the election, end of 2016, 2017, we chopped around, found support around this 133 level. That's what I'd be looking at if we continue on this bigger time frame to roll over here. It's about 5% from where we are. That would effectively give back all of last year's gains at that point. So Russell, really tough spot right now. Momentum breaking new lows, bearish engulfing candle from last week, getting confirmation, higher volume coming in. Really just an ugly scene all around here for the Russell 2000. If you are bullish here, if you want to see the stick save come in here, 145, that's what we need to get back above 146 and do it quickly. Again, Monday we talked about the different scenarios, high volume reversal, gap and go, those types of things to really save face here on the Russell. Otherwise, really tough to want to be long this, until we see more evidence above that 145, 146 area. And then finally, we look at the NASDAQ 100. This is in fact holding on to last week's gain. This was barely down this week, so minus 0.28%, down 45 cents. You can see hovering right at this 160 area here. So the Qs, it's really kind of pick your camp right now, right? Do you want to believe in some of the relative strength we're seeing excuse me, in the Qs right now, or do you want to kind of roll with what the Russell 2000 is telling us, and in fact it is rolling over. So the Qs, the relative strength, kind of star shine of the bull side right now. We're holding on to last week's lows. We're holding on to this cluster of support around 160. For how long, not sure. We do still have that bullish divergence here on the MACD for momentum in the Qs. So this is where, you know, you'd like to see the market try and stabilize. Maybe the Qs starts to hold up here and ends up becoming sort of the rotational leader for the next kind of leg up, if you believe in a leg up anytime soon. But the Qs, I think, are interesting. If we start really, you know, getting hammered below this 160 area, then of course, you know, we're going to really be in full confirmation across the board to the downside. So that, I think, is everything I wanted to say on the markets. It's definitely sellers having the upper hand here, but let's just be aware that we are at, you know, sort of a tricky spot there. So let's move into some of the other major markets. We'll go to bonds next. TLT, you can see, was still pretty firm this week. It ended flat, but remember we had that big kind of expansion in range last week, 2.7% to the upside in TLT, reclaiming this one major 117 level. We're basically consolidating through time here. Nothing much else to say. It's constructive so long as it can hold above that 116, 117 area. Bulls right now in control here in the short to midterm for bonds. USO, we look here at the chart, down 2.61%. Again, not doing a whole lot. It's an inside week. In fact, from last week's range, we're closing on the lower end of it. We're in a pretty steep downtrend here, so it doesn't really look like a good picture, but, you know, the bleeding has at least stopped in the short term. Market's trying to discern, you know, figure out direction right now. This could turn into a very weak sort of bear flag that continuates to the downside. That's, of course, the bearish scenario here, which would send oil to new lows. Otherwise, if this can continue to stabilize in here, then maybe there's a shot for some reversion to the upside. But dicey scenario, price compression, we'll see which way it leans. Natural gas, so we had our series of higher lows and lower highs in place, and now we're getting the result of that pattern here. So with this volatility compression, we've got a breakdown and reversal of some of this price action, some of the strong run up from November. If we throw on just a rough chart here, it looks like we're probably, let's see, if I throw on some fibs, go from all the way to the pivot, we're right around that 61.8. I know some people would probably use this line here. So, you know, we've given back a good, you know, amount of this recent leg higher here. If you're, you know, bullish, you know, again, you'd kind of want to see the bulls step in right above this $30 area. Don't give it all back. Put in some type of higher low here if possible, to keep this holding up. But for now, there's a lot of supply up here in this recent pattern that is now underwater. Noted volume, though, is not too heavy right now. It's actually pretty light all throughout this selling here. So even though we had an 8% down day on you know, on Friday, UNG, at least the ETF, not showing a whole lot of volume traded on this down move. So kind of interesting, but for me, there's not a whole lot to say about it, or, you know, actionable setup at this point. Kind of just wait and see, you know, at this point. Finally, we'll go to metals. GLD here on the week, down a little over 1%. Inside week for GLD. That means we traded above last week's lows, below last week's highs, and you know, kind of just meandering along. This has been grinding higher ever since kind of bottoming out here in August. It hasn't been a rip-roaring strong trend. It's really been pretty lackluster and pretty sloppy, but the bulls, you know, really just still haven't given up, you know, these gains here. They're still trying to hold on to these trends to the upside. So the grind continues for now. 115 still my line in the sand there. Buyers still overall in control. And for silver, still the sideways channel, $14 to $13.10. That's what I'm looking at. It's in the upper half here, but still well within these bounds. Probably going to close the year in these bounds here. So we'll look for 2019 maybe to give us some direction on a breakout in either space. But it is, you know, it is good to see that it has been moving sideways for 4 months, kind of fueling up. Always like to see those extended bases for sustained moves once it picks its direction. So that is everything I wanted to cover there. Let's look at some of the sectors here now on the week. If we look here, sort based on performance, for the week. We had semis, which we talked about at the top of the video, which was pretty resilient here. Again, it's not, when we zoom out, I mean, it's not a picture to necessarily get excited about, given the fact it is showing some short-term relative strength. You know, given the fact that we did break down from this major kind of you know, topping pattern, or if you want to call it a topping pattern yet, but we're certainly broke down from this consolidation here below $100, $97, whatever you want to use as your trigger, but we're kind of doing a base underneath this larger base here. So for the bull case, again, you're going to want to see this hold in here. So while the Russell 2000 breaks to new lows, while the S&P 500 flirts with new lows, we do still have kind of a series of higher lows here in the short term for the semis. So again, you want to see if this can persist. That would be ideal. Then you get your kind of breakout reversal to the upside. That would be the bull case. Otherwise, if we start to roll over from these levels, then you know, again, it's going to be the elevator down. Pretty ugly price action could unfold if we start losing this little trend line here of higher lows. XLU, second best performer this week. It was positive, sort of expected. Utilities, defensive space inside or amidst a you know, a market sell-off. That does make sense. We get XLU now closing at new weekly highs. MACD trying to continue higher here, and some pretty good volume coming in as it escapes above this $55 level, which was holding as resistance for some time. Still a lot of individual setups in that space. And XLK, again, kind of in that Q's theme, semiconductors, technology kind of holding up this week. You can see hasn't quite broken to new lows. Isn't the most you know, encouraging looking chart right now, but if it can continue to hold and not break down, that would be notable. On the downside, financials. Financials look like a total mess. They look like a mess last week. We talked about this massive engulfing bearish bar here last week at a very critical spot. Basically can't get any uglier than last week's kind of weekly candle there, and now we're getting follow through to that engulfing bar. So there is some pretty big support down here in the XLF around $23. It seems like it's on its way to test that, which of course is going to continue to put pressure on the market if it does head down to that $23 area. But that looks, you know, like the big level that it could be going to. Maybe 24 finds some support. We did find it pivot here back in September of 2017. But financials oversold in the short term. They've been crushed here in a very short time. They're down about 13% in less than 2 weeks. So a pretty substantial move there for financials, but that's weighing on the market. Energy also weighing on the market with oil, gas, you know, US dollar ripping here, putting some pressure on the XLE. So this one here is looking like it needs to find some support right around this 6150 area. That was where it found support down here in mid-2017, and note it did kind of just totally give back and cut right through a lot of this opening supply in here from February and March. So XLE, real tough spot as well. And healthcare, which had been holding up pretty well, did see a little bit of rotation to the downside this week. 1.77% to the downside, breaking below last week's lows. If we go to a daily chart, it is right at a more, you know, call it intermediate term level of support. It had been finding some buyers showing up right around where it's trading right now, this $89 area. It briefly broke below it in October. This would be a good spot for it to hold. It was doing pretty well. It was acting pretty strong, but we did see even on Fridays where a lot of the selling took place here, high volume. So be interesting to see if this can continue to you know, hold above these lows and this general area, or if this is going to kind of fall by the wayside and be another market in a clear sort of downtrend. So that is everything. That's the landscape. That's all the notes that I wanted to cover. Tough sledding out there. Tough December so far for the markets. We got the S&P 500, which I think is down around 3%, 2.5% on the year. Qs are up around 3%, and then the Russell 2000 down around 8%. Only a couple weeks of trading left. We'll see where they fall, but for now they are looking weak. But let's not you know, let's not write it off yet. We could see that magical bid appear next week. So that is it. Thanks so much as always for watching. You can find these videos on thetraders.com or our YouTube channel every Tuesday and Friday. Subscribe there for up-to-dates when we publish those new videos. So thanks so much. Have a great rest of your weekend, and I will talk to you guys on Tuesday.